Good evening, all. Ira Epstein of Linn Associates with your financial market wrap-up. And this wrap-up is for Tuesday, the 4th of May, 2021, 6:45 p.m. Central Time. Interesting day, the end of an era. The CME Group announced that the only pit that's going to remain open after September is going to be the euro dollar pit. That's the options pit there. They do monster volume there and online. They are closing down the remaining agriculture options. They're not even going to reopen the pits there. They'll let the S&Ps finish out until September, the big size one that nobody can afford anyways. And the options on that, that'll be in September. So it's over, the end of an era, place where I didn't learn it in this new Board of Trade facility building as it is. I learned it in the old buildings, but boy, what a wonderful time it was learning how to do that on the pips. New York Stock Exchange is the same thing. You do realize that. What you see behind you are the market makers, but in my heyday, I used to go down to the floor of New York Stock Exchange. I also had part of a stock firm. And it was insanity. I mean, just rooms of running people, hundreds and hundreds of people. Those days are gone. Okay, I understand it. You move on with the technology. Now, today was all about a normal correction trying to set in stock indices, and people are dying to say, sell May and go away, and I get it. You know, I'm the one that brings it up on a regular basis that that's it. But in order to go away, you got to get through the month of May. Why? Because whatever the high is what you pay attention to. If that high's taken out, why are you selling May and going away? You want to protect yourself. So the first days now, as we're getting these corrections, the market's getting spooked, but the market's been acting heavy. Real heavy anyways. I've pointed that out to you, and how long? It's been the S&P living in its world of going for new highs, the Dow acting very good. The other indices are not acting good. They're acting very heavy. And today, Janet Yellen, I don't think she misspoke. She had two speeches today, and as she was giving them, she was using the word that modest rate hikes. The market didn't like that. It means, oh, an ex-Fed chair and the current Treasury Secretary, interest rates are going up, so they bid up the dollar on that news. They broke other markets on it. Certainly the stock market rock and rolled because of that. But I watched all day the bonds and notes. They didn't do anything in the way of what they should have done is what? They should have been going where yields are going up. They didn't. Be careful when you see that, okay? Every word, don't hang your life by it. When you look at a weekly area chart, for a change, I'm actually looking at a market that's down 0.4% on a weekly chart of 16 points, where you can see back here, this was 41.7450, 71.50, and 76. So for the past 3 weeks, you really haven't been making higher weekly closes. I don't know if this will be it or not, but we'll see. When I look at the action here, I want to take away this. I don't think this looks that bullish. You know, again, it's a consolidation phase. I didn't say it's bearish. It's heavy. That's what I'm saying. Now, if I take a look at the swing line with it, a whole different story. So let's get rid of today. Your swing line, you had higher highs, higher lows, and you haven't been able to punch through anything. When you broke down under this today, you broke that pattern. Okay, it did not throw out a bear pattern. It now has a pattern of a higher high and a lower low. That is not a bear pattern. It's a nothing pattern. Where did the market fight a battle? As you can see, it's been trying to stay over this 18-day moving average of closes. You haven't been getting to that very often, and you certainly haven't stayed under it very much. March, you did. One part of February, about a week and a half, 2 weeks at a time most. So here you come back under it, and the market's challenging it again. Okay. It's not the kind of market that we had 6 months ago where you never challenged that number. It's a market that has rolled over, and yes, it's going to attract, oh, we're in May and it's the sell May, go away. You got to go to the weekly charts to know if that's the case, and I'm not going to bring them up here. I'll do that on the weekend, but they have not, at least as of tonight, rolled over. When I look at what the market's really doing, it's getting itself caught in these Bollinger Bands. So it's narrowed in one more time. And as it does it, it churns you. This is the big churn. How long it'll do that, I don't know. Do I have any interest from my subscribers to buy and sell in that? Zero. That just gets you mishmashed. What started this? Come back with me over here. Here's your slow stochastic, and on this day, right here, that was last Friday, you lost the embedded reading. When you lose the embedded reading, what next happens if you don't gain it back the very next day? And I mean early the next day. The odds favor price is going to drop to the closest moving average. Market goes up, and I know you're going to tell me I don't know what I'm talking about, and I agree, I probably don't. I'm looking for the resistance up there. I'm still looking for that 18-day average, and I got what I was expecting. Okay, when this happens, I have a trade cost, a lost embedded slow stochastic trade that I teach. I'm not going to give you all the particulars here. That's what my subscribers pay me for. But that was a sell setup, the way I teach it on the rally yesterday, and today was the reward. In the NASDAQ, the market has just been with lower highs, lower lows. Now, we come into the market, this is yesterday. So today, I'm looking that if you break further down, the first challenge of a Bollinger Band is normally where the pros will take money off the table. You did that, and look, tonight you're trying to get back into the Bollinger Bands. You're also oversold as can be. If it continues to fall, the 100-day average is support. Resistance certainly back up at 13,856. Nothing bullish on this chart, but too oversold already to attract, I think, new short selling in any major way. The Dow is the strongest. You can see the pattern is still one of higher lows and higher highs. However, I hate when this occurs. Once those bands narrow in like that, it's often a sign you're going to start churning away, and that means a guy like me likes to run away from those type of markets. So I watch it, and I can tell you, for my paid subscribers, I don't have any recommendations out in these right now. I'm bearish the Russell. I think the market turned down. Lower highs, lower lows. I do think the sales are going to come in at 2254.30, let's call it. The stop probably over these highs of 2291. You have to decide, do you have a stomach for that size risk? It's not small. That's what I'm waiting on. But if you were to call me, Ira, got a gun to your head, what are you going to do? I'd be a person telling you, I think the short side's right now the right, but I wouldn't get more excited than getting down to that number, and you can't afford to get out and over 2 days ago's high. In the VIX, okay, so here you are fighting at this sideways action. I know I have been consistent saying, I don't know what it's going to do here. Is it going to break down and try to get back to last year's levels, which were a little lower and tight? It keeps hitting the upper Bollinger Band. Doesn't hit the lower one, but it's not going anywhere. Today, the market breaks out to the upside, gets through that number, and up to the upper, 100-day average, and stops there. Now it's over the upper Bollinger Band, but it gave back just about all the gain on the day. It's a very, very minor gain for the day. But it is a sign, two things. Number one, the market's not buying into the panic that hit at one point today in the market. Oh, interest rates, interest rates. Otherwise, it should have gone through that number. So I think it's a contained drop in the stock market, and we'll see if this can stay over the upper Bollinger Band, but it's bullish. As long as it's bullish, that means there's a negative taste into the stock market. Bonds are bullish. That's a negative also. Why? It means interest rates aren't going up. People aren't panicking. This market's also just saying it's comfortable here. So everybody that thought interest rates were just going to keep galloping, for the time being at least, the market is very contained. Do you see what it's contained in? Do you see that sideways action as defined by the Bollinger Band? Admittedly, it's 2.5 points. It's not the smallest action, but that's what you've got. If you rally, the resistance, 159. Support, 157.24, but the risk on the trade's huge because you got to risk all the way down to one tick under this low of 156.21 would be it. So it's over $1,000 risk. I don't think you're going to attract a lot of people to take that, but what do I know? In the 10-year note, lower low, higher high, stuck in the sideways action of the Bollinger Band. Dollar index didn't run away anywhere. It's up to the 18-day average, and the market is just opened. So I'm looking at the trade tonight, and the market's already down just a fraction, a tick. But I'm looking for the 18-day average down to the 100-day to be the support temporarily. The market lost its embedded reading, which was bearish. When you lose it, what do you often do? You make a run to the 18-day average of closes. You already were out of your trend, so the market got there, fell back on Monday, went back up to it today, and now it's just sort of hanging here. No surprises at all. And the flip-flop of that would be in the euro, which happened here. This is why I was so upset on Friday. I didn't expect this to happen on Friday. I thought the market was going to do better than that. It lost the embedded reading. It lost that. I knew I was not going to have a good day, and I didn't. And the market came back a little bit, and yesterday was the day if you were caught in anything to use that rally, and today to come out, and a lot of traders did. In the British pound, you have a higher high, lower low, and you're just drifting. I don't see anything there. So that brings us to Bitcoin. Now, in Bitcoin, the big resistance is right here. The reason I'm now excited about Bitcoin is because I can use this chart to make predictions on the 1/10 size Bitcoin. You heard me. The new futures contract, which has volume that's exploding. I stopped looking at it this morning at 9 o'clock, and it was almost 13,000 contracts traded. I don't know what it did for the day, but I'm sure it was pretty good. And all I'm looking for is the resistance there. Why? Because while the swing line's up, that was the resistance point. You're backing off. Don't see anything in it yet, but I'm excited because I can take this now and relate it to a Bitcoin contract with a couple of $1,000 margin that's got plenty of volatility. My kind of traders will love that. That'll be in our subscription. It's not going to be here. The differences between July Brent and WTI prices. Well, WTI is winning the war. Higher lows, higher highs. You got to close back under the low right here. The differential of 315 in order to change that trend. So right now, WTI stronger, Brent stronger than WTI. Did I say it wrong the other way? It's Brent that is stronger than the WTI. And when you come to both of them, you're going to see you got a lower low, you went up to the upper Bollinger Band. Watch this. This is the 20, I screwed up. This is the June. Forget it. I got to bring that into the July, and I'm going to bring this to July too. My fault, okay? I said this yesterday, and I screwed it up. Before I get rid of these charts, I'm going to fix it right now. Higher lows, higher highs. We had an API report today that was very, very bullish. You had a big draw of 7.7 million in the oil stocks, and then big draws in gasoline and diesel. So instead of just the product being drawn on, now it's also the source of the product, the crude itself, the distillates, gasoline. That's why the market is up tonight. The EIA is not looking for anything like that. It's looking for 2 million barrel draw tomorrow. One of them's going to be right, the other wrong. We'll see what that is. Rebob gasoline, new highs for this move, okay? How long have I been telling you that I think you're going to explode in the spring and summer driving? You've heard me say it here repeatedly, and I haven't changed my opinion on that. So you put it all together, got an interesting game. Stock's up a little bit right now, but, you know, when we wake up, who knows where it'll all be. I have my own thoughts, and we'll take it from there. I want to remind you, while I may not appear for you free all the time, my subscribers know I appear. And when I appear, I'm full of opinion. I'm giving you, I want you to buy here. I want you to sell there. This is what I want you to do. This is what I want you to do on a weekly chart. This is what I think you do on a daily. I'm obviously going in with what's called my What's Up. And that'll be a show that we start sometime next week. I'll let you know when we do it. And it's a Zoom. You'll have to come in on the Zoom room, sign up for it, and away you go from there. I'll take fast order questions. Maybe the show's 10, 15 minutes long. It won't be an hour. It's going to be short, and then we'll do them again, maybe again in the week. That's a lot of fun for me, so I have a ball doing those type of things. But I'm going to be also giving specialties to my subscribers. So for $7.95 to try this out, you got to be kidding me. And I get people that will say, well, you know, I'm a modest trader. I don't want to do that. Okay, don't expect too much from me. Guy that can't afford $8, what are you even bothering me for? Okay, that just makes no sense. But if you're the person that can spend the $8, I hope you are, www.iraepstein.com. Give it a try. It's under the word research when you get there. And you can take a look at our education and what's going on. I have a lot of courses that I'm coming out with. Every one of the courses will offer a discount to my subscribers that is geared to pay for in the subscription of an ETF video or the morning subscriber video by itself to cover the cost of that, pretty close to it, if not all of it. I'm Ira Epstein. You have a good day. I will talk to you all tomorrow.